On Friday, May 2nd, the stock market closed at a higher price level than it did on April 2nd. In and of itself, a normal event. It's normal for the stock market to go up. April 2nd, though, was the last day before President Trump announced his reciprocal tariffs in what he called Liberation Day. That big long table, the confusing formulas, and a stock market crash that followed. We hit bear market levels over the weeks that followed that Liberation Day, and yet here we are just a month out and we're already back at a higher level? What explains that? And what does that mean for us as investors trying to parse all of this? Well, my name's Daniel, and I have 3 possible answers for the first thing, and then 2 possible thoughts for us to keep in mind as investors, whatever the answers are to what's going on in the stock market. The first answer you would go to is that tariffs dropped, that President Trump backed off, which is not really true. Yes, he paused those reciprocal tariffs, the ones with the table and the confusing calculation, and that's a good thing. But we still have a 10% baseline tariff across the board. We still have a 145% tariff on goods from China, which is kind of enormous, kind of halts imports from China, which is kind of a big deal. A lot of stuff comes from there. And there are even some tariffs between us and Canada and Mexico, 2 of our biggest trading partners and closest allies in theory. Those tariffs still being there means that the position is worse now, tariff-wise, than it was before April 2nd. So that in and of itself doesn't explain why the stock market would have risen. At the same time, the stock market is expectation game, and the stock market now expects tariffs to go lower. It expected some degree of tariffs before April 2nd. So we had a baseline expectation. Liberation Day was way worse than anybody expected. But since then, the Trump administration did pause the reciprocal tariffs until July 9th, is making noise about making deals, is eager to make deals, wants to make deals to show the market, hey, we know what we're doing, we're getting a better situation for the United States economy, and it won't hurt our markets as badly as you might have thought. Even China is making noise about, yeah, we're open to negotiating. The stock market is then also expecting deregulation and lower taxes, things that usually lead to more corporate profits. And so they're saying, okay, we may be at a point where the tariffs will be like we thought before, not so bad that the good things won't outweigh them. That's the expectation game that would explain how we got to where we are. The last point is that the stock market and the economy is a fluid environment. Things adapt, things shift. Companies change what they're doing to adapt to the current situation. For example, Apple. We make iPhones in China. Really expensive to ship those to the US, even with certain exceptions that are in place. We also make iPhones in India. We'll send those to the United States, and we'll send our China-made iPhones to the rest of the world. We're still going to expect $900 million in costs this quarter, but if we're Apple, that's not so bad. Writ large, companies adapt, economic systems adapt to the current situation. Tariff is like sand in the gears. It's not a good thing for this sort of flow, but companies are going to eventually figure out how to work around it and minimize the effect of the tariffs. That's the hope, at least. The thing we need to keep in mind, though, as investors is that it's still early. We're still a month out from this. We are going through an earnings season, which is our first window from companies themselves to hear how things are going. We're hearing some negative things. Companies like Procter & Gamble, Pepsi, McDonald's, Staples companies are saying, yeah, we're seeing some pressure on consumers. And this is before the tariffs actually hit. Most of these companies are reporting on earnings that ended at the end of March, before April 2nd, as you know from the calendar. Meaning that it's still a little early to say the tariffs, what sort of impact they're going to have and how it's going to hit companies. It could be that the stock market is expecting all the good things and kind of ignoring the bad things, or it could be the stock market is right. It's too early to know, but the thing I think we can expect from this administration and this environment is volatility, meaning ups and downs. We should be prepared for those things, which gets us to our last point. The crash is an opportunity. It's a gut check. It allows you to see, how do I feel about my portfolio? How stupid do I feel that my stocks are down? How bad do I feel? Maybe you didn't feel bad at all. Maybe you were betting against the market, or maybe You weren't paying attention. Always a good thing to do. You invest for the long term. These gyrations aren't going to matter all the time. At the same time, I did make some changes. I did use that period to adjust. I added some hedges. I added some bonds. I sold some of my overvalued things. I got rid of some of my smaller positions that I wasn't crazy about. Of course, it would have been better to do this before we had a crash, but you can't always anticipate what's coming. You need to take the advantage to adapt and to get yourself into a confident position. I feel good about where my portfolio is now, whether or not we have the ups or the downs. And if we do have another crash, I feel I'm better positioned to go on offense the next time around. You have to take these opportunities where we saw what it feels like to drop 20%, but then we got a rebound so we didn't actually feel that damage long term. Position yourself, prepare, get ready, because I think these sorts of things to some degree are going to happen again. We live in interesting times. Tariffs makes things especially volatile, and I am sure there are going to be more chapters in this drama to come. Prepare for that. Keep alert as much as you need to, depending on your investment style. Have a strategy that suits you through the ups and downs, because that's how you stick to success and have success over years and not just months. Things can happen in a crazy fashion within a month. Who knows where we are in June? But this has been the Stock Market Thinko. Thank you for watching. I'm Daniel of Short Investing Guide and Middle Coast Investing. Subscribe to this channel to get more of these videos, which I hope to put out every week. Thank you. See you next time.